Today, we're talking about one of the most explosive semiconductor stocks in the market right now, SanDisk, trading under the ticker SNDK. As of March 13th, 2026, SanDisk Corporation stock surged 6.92% during regular trading hours, closing at $661.62. Even more astonishing, the stock has gained about 1,265% over the past year. However, despite this incredible run, the stock has also experienced significant volatility in recent weeks, with large swings both up and down. So what exactly is driving this rally, and is the stock still worth buying today? Let's break it down. First, let's talk about why the stock jumped today and why it has surged so dramatically over the past year. One of the biggest drivers is the AI infrastructure boom. The rapid expansion of artificial intelligence systems requires enormous amounts of data storage, especially high-performance flash memory. Hyperscalers like cloud providers and large data centers are building massive AI clusters, and those systems require extremely fast storage to handle AI model training and inference workloads. SanDisk specializes in NAND flash memory, which is widely used in solid-state drives, or SSDs, and these drives are critical for AI data pipelines. As demand for AI hardware skyrockets, demand for high-performance flash storage has surged alongside it. Another major factor is pricing power. The global market for NAND flash memory has tightened significantly. Industry reports suggest that SSD contract prices rose more than 40% in early 2026, allowing SanDisk to dramatically improve margins. On top of that, the company recently reported very strong earnings growth. In the second quarter of fiscal 2026, SanDisk posted net income of about $803 million, representing a massive 672% increase year over year. That kind of growth is exactly the type of signal that gets investors excited. But perhaps the most important structural change happened in 2025, when SanDisk was spun off as an independent company from Western Digital. Before the spinoff, Western Digital combined both hard disk drive businesses and flash memory operations. But HDD storage is a slower growth segment, while flash memory is at the center of the AI and data center revolution. By separating the flash business, SanDisk was able to become a pure-play NAND and AI storage company, which attracted significant investor interest. Now, let's quickly discuss what this company actually does. SanDisk designs, manufactures, and sells NAND flash memory products and storage solutions used across several major markets. The first segment is enterprise storage. This includes high-capacity SSDs used by cloud providers and hyperscale data centers. These systems power large-scale AI computing clusters and enterprise applications. The second segment is client storage solutions, which includes SSDs used in laptops, desktop computers, and gaming systems. And the third segment is embedded and removable storage. This includes flash storage used in automobiles, smartphones, IoT devices, USB drives, and memory cards. Because flash memory is becoming the dominant form of storage across computing platforms, SanDisk sits right in the middle of several long-term growth trends: AI infrastructure, cloud computing, and connected devices. Next, let's talk about analyst price targets. Following the massive rally in the stock, analysts have been raising their expectations significantly. The average one-year price target for SanDisk currently sits around $738.78 per share, implying additional upside from current levels. Some bullish analysts have even issued high-end targets of around $1,000, particularly from firms that believe AI infrastructure spending will continue accelerating over the next few years. Looking further out, some projections based on 2027 earnings estimates suggest the stock could potentially reach around $1,401 per share, assuming earnings growth continues and valuation multiples expand alongside it. Of course, price targets are just estimates, but they show that Wall Street still sees meaningful growth potential in the company. Now let's look at the valuation, which is where things get really interesting. Despite the enormous rally, SanDisk is currently trading at roughly 15 to 17 times forward earnings, based on analyst estimates. For comparison, many technology companies in the NASDAQ 100 trade at significantly higher multiples. That means some investors actually argue that SanDisk is still reasonably valued relative to its growth rate. Earnings expectations are also extremely aggressive. Analysts expect earnings per share to jump from roughly $2.99 in 2025 to more than $39 in 2026, and potentially around $86 per share by 2027. If those estimates hold, the company could generate massive cash flow growth, which is why some models estimate an intrinsic value of around $717 per share, suggesting the stock may still be slightly undervalued. However, not all valuation models agree. Some more conservative models estimate fair value closer to about $157 per share, highlighting how uncertain projections can be for high-growth semiconductor companies. That leads to the big question. Is SanDisk still a buy? The overall analyst consensus currently leans toward buy or outperform. The main bullish argument is that the AI infrastructure build-out is still in its early stages, and demand for flash storage could remain extremely strong for several years. However, some analysts suggest investors should wait for a pullback rather than chasing the stock after such a massive run. Historically, semiconductor stocks often experience sharp corrections after rapid rallies. Finally, let's talk about the key risks investors should keep in mind. The first risk is industry cyclicality. The memory market is famous for its boom and bust cycles. When supply eventually catches up with demand, prices for NAND flash can fall sharply, which would hurt margins. The second risk is AI spending slowing down. Right now, companies are racing to build AI infrastructure. But if that spending slows or becomes more efficient, demand for storage could weaken. The third risk is capacity limitations. Reports suggest SanDisk is already operating close to full production capacity. If the company cannot expand manufacturing quickly enough, it may struggle to capture all available demand. And finally, there's simply market volatility. When a stock rises more than 1,200% in a year, it often attracts speculative trading, which can lead to sharp price swings. So while the long-term story remains exciting, investors should be prepared for significant volatility along the way. With all that said, SanDisk has clearly positioned itself as a major player in the AI storage ecosystem, and its transformation into an independent flash-focused company has helped unlock tremendous investor interest. All right, that's it for today's breakdown of SanDisk stock. If you found this analysis helpful, please like the video and subscribe to the channel for more stock market insights and deep dives. Thank you so much for watching, and I'll see you in the next video.